insurance and trust intertwined, how long back do you think, this sort of partnership is?
Maybe 30 years, 40 years since we've had it.
Try 2 millennia,
Oh, wow.
2000 years. So ancient Indian texts like the Manusmriti, they actually speak of concepts of shared liability, wherein if there was a catastrophic loss to any one member of the community, the food community would come together as a trust and they would look after each other. But at the other end, fraud didn't retreat, it graduated, it evolved. So now you've got sophisticated networks who actually work in cohesion, constantly testing your systems to find flaws, to find friction points, to find loopholes.
Where do insurance typically, potentially break trust for customers? Unintentionally, maybe. And what does it take to fix something like that?
I think it's more a misunderstanding in terms of
Welcome to another edition of Trust Matters. Risk management in insurance is one of the most complex yet critical jobs in financial services, as you can imagine. It's not just about the frameworks, compliance checklists. It's about building the kind of institutional trust, as we say, that lets a company take on risk confidently and protects its customer when it matters most. We have a very special guest today, who to discuss sort of insurance and trust. And someone who has spent over 2 decades building risk and audit infrastructure for organizations like Prudential, Access Risk Consulting, and EY. Today, as the Chief Risk Officer at Royal Sundaram General Insurance, he's shaping what risk leadership looks like for one of India's most trusted insurance brand. Lesten D'souza, welcome to Trust Matters.
Thank you. It's a pleasure to serve.
So, I'll just get started. Insurance is often described as a business of trust. But in practice, I want to hear from you, what actually earns that trust today?
If you think about it, and as you rightly mentioned, insurance and trust, before going to earning the trust, if I could take maybe just a step back.
Sure.
Insurance and trust intertwined. How long back do you think, this sort of partnership is? Just take a guess. Do you think 10 years, 20 years? Privatized, take a wild guess,
Maybe 30 years, 40 years since we've had it.
A little more.
Little more?
Yeah,
Yeah. 100 years?
So try 2 millennia.
Oh, wow.
2000 years. So ancient Indian texts like the Manusmriti, they actually speak of concepts of shared liability, wherein if there was a catastrophic loss to any one member of the community, the food community would come together as a trust and they would look after each other. Kautilya's Arthashastra actually has a mechanism for maritime insurance.
Wow.
Wherein at that point in time, 25 to 32% of global GDP was contributed by India. So it's actually written there, the actual full maritime routes, and also if there are losses, how the state would help reimburse.
Very interesting.
The modern construct is maybe 17th century-ish. A gentleman called Mr. Edward, he set up Lloyd's coffee shop. You would have ship owners coming, merchants coming, I would think expirators coming, sailors coming. They would sit and then say, okay, this is a risk I will take, this I will not take. So underwriter, the word underwriting comes from a gentleman actually writing under the risk he or she is willing to carry. So it came from a place of trust wherein the underwriter knew a lot about the risk. The insured knows about his or her situation. And they would come together and say, okay, I'm willing to write this, will pay you so much. In case an uncertain event happens, you will help me out. I trust that you will be there with me in my moment of need. So it is this sort of faith that gets built in terms of those most vulnerable moments when the uncertain event happens and the insurer stands by the insured. And when you do this as not as a one-off, but as a daily consistent behavior, I think that's the proof of the trust that you want. So little long-winded answer, but I think it's important to understand, at least my belief, and I've worked across financial services a bit, across India and other countries, insurance and trust, and the insurance industry earning trust. I think very much interlocked. And
No, I think that's very well put, because I think typically, again, it becomes very the way we look at trust. It's sort of like a very abstract construct, and I think the way you described it, where it actually came from, collective of people coming together to say that, look, if some disaster happens, we need to support. And I think this is just an extension now of that. So, if I had an emergency and someone stood by me, the only way that happens is if I sort of build that trust ecosystem. Now, let's talk about maybe not 2 millennia back, but just a couple of decades. You've seen risk evolve over the last 20 odd years, right? If you have to distill it, what has fundamentally changed in organization that in the way they look at risk today?
I would put it down to, say, three broad paradigm shifts. Yeah. The first would be looking at controls not from a theoretical risk aspect, but more from consequences. I see that one as a broad category, and then we'll break down into each of them. The second one is risk being more anticipatory as opposed to the post-mortem. Yeah. And the third one would be risk being a partner with business. And now let's break these down into a little more detail. When I just started off, you'll have your risk assessment, theoretical risk, you'll have the file, I'm a chartered accountant, so typically all the evidence is in, the ticks box, the checklist, manager would review, great.
Right.
Today, it's consequence management. So I remember a board meeting that I was sitting with, in which the director actually asked a question that was an epiphany moment, wherein are we doing risk management or consequent management? So simple thing, if a particular strait in a specific geography is closing down, no matter what you do here, you are left with managing the consequences. So I think that from theoretical to actual real world. Secondly, as I said, not a postmortem, but forward anticipatory thinking. Now, Mark Twain once remarked, he said, history doesn't repeat itself. More often it rhymes. So your last cyber incident will not happen again. A like will happen. And the third is, as I said, it just sits with business, not the doctor. No, will not happen. These three shifts.
Yeah, and you're seeing that sort of across the. Is that fundamentally changing how even the organization is set up, or is that still similar, but just now how people think about it has changed?
I think the mindset shift that's happened. So largely, it's more acceptance of risk as a business partner. So historically, chief risk officers were known as Dr. No. The minute you go is going to say no. Okay, it's like monopoly, you end up in jail.
Absolutely.
And then you have to take a card and
yes.
just pass. But what's changing now is, so I don't know if you're an F1 fan, but in F1,
Absolutely.
it's that hairpin turn where the most of the action, if you get the seats there and those are premium seats, and that's where you need to sit.
Right.
So risk is that intelligent braking technology, not to stop you. Slow down just enough. Negotiate that hairpin till you get the straight lap. And straight lap you zoom.
Yeah. Oh, what a apt sort of analogy for this, because as a F1 fan, I get it. Now, as the systems are obviously getting smarter now with AI and all of that as well, and the controls are getting tighter. I think companies are obviously investing a lot in technology and services to figure this out. How are the fraud patterns evolving? How do you see them change?
But the advent of AI, I think two things have happened, and surprisingly, I think they contradict each other. The old time fraud, the clumsy one, where inflated bill.
Yeah.
The bill, one number scratched off and a British number, two bills, signature weird, all that gone. AI has had to pick it up like this. But at the other end, fraud didn't retreat. It graduated, it evolved. So now you've got sophisticated networks who actually work in cohesion, constantly testing your systems to find flaws, to find friction points, to find loopholes. And if they do find it, it's not like calling victory and, okay, it's waiting for the opportune moment and then exploiting the gap. So you see at one end, AI helping you, I would not say lower order fraud, but helping pick up the basics, the run of the mill.
Right.
But at the other end, making it more and more difficult to understand what's the current or the next thing going to happen. So I see this as an evolution in terms of the pattern of fraud that's happening on account of it.
Yeah, and I think we are also seeing a lot of this where, you know, we were all sort of hailing the arrival of AI and saying, wow, this is going to be amazing for business. But I think we're seeing the flip side of it, especially where we sit. And I think probably for you as well, sitting on the side of ensuring risk is managed, uh, it's changing the way the criminals sort of are operating now, right? And there are systems in place, there are organizations being set up to defraud, and using AI primarily as one of their key mechanisms. So it's interesting to hear that. I think there is an understanding. I think when the next natural question becomes is then, knowing this, how do organizations need to rethink how they look at risk and fraud?
Uh, in my experience, and I've done industry, I've done consulting, global companies, India, the companies that are the most successful, the ones that are evolved in their maturity, have not focused on the most advanced technologies to curb. They've not gone for the shiniest toys in the toy box, if I have to call it. They've gone for architecture. And when I see architecture, it's one, the culture at the top, wherein there is a clear mandate to say, not acceptable. Internal fraud or external fraud, not acceptable. Secondly, there is a thinking on the principles on which we will operate. And third, you have the data to support it. So largely when you set up this architecture, that's where you see, the organization really succeeding. And that's where the organization get the most value to actually be curb leakages, maybe curb claims fraud. I see that as the key for successful organizations and how they evolve their structures and frameworks.
Right. So I think the last two make sense, technology and data and all of that. But I think it's very interesting what you said about the architecture on the top, which is it's almost the people side of things, right? Maybe you can expound on that a little bit more. Is it that companies need to have a kind of mindset of saying that, look, it's not growth at any cost. It's not cutting corners because we need to show some sort of growth. It is about having that prudence, and it's agreed to across the board. Is that what you're referring to?
I think the word prudence that you've mentioned is an important word. Yeah, so prudence stands between being too aggressive and too naive, for loss of a better word. I think prudence is important, and it's more tying into the element of trust that we started the conversation with. That if you're in the business of long term trust, if you're looking to build that, but if you're incentivizing for getting the top line,
Right.
issuing the policy and getting a low loss ratio, then it won't work. But along with doing these activities, you are also looking at customer complaints. You are looking at net promoter scores. We're looking at the speed with which customers renew. So this is the additional culture tone at the top.
Right.
As you rightly said, prudent growth, but not growth at any cost.
Yeah, absolutely makes sense. Now, we'll talk a little bit about the evolution of general insurance in India. You know, as it expands beyond motor into health, travel, and I think newer segments, and I think those will keep coming up. How do you think it's evolving? What do you see what are you seeing from your vantage point as the general evolution of this space?
And I'm sorry, if again, and indulge me for a couple of minutes.
Yep, absolutely.
Last time you would have bought your policy, what would you have done? Gone, clicked, bought online?
Yep.
PDF?
Absolutely.
Yeah. So the first insurance entity in India was set up in 1818. I think it was the Oriental Life Insurance Company in Calcutta. And they were set up because they had to insure Europeans in India. No Indians insured. Now, before you get all fire and brimstone, okay, you have to look at history, right? Because history is no memory other than the vantage point from which you remember it. So they set up because what they said was that the life expectancy is low. Yeah, we are focusing on the Europeans, the colonials who are coming here. And hence we will only insure them. But what happened to them? It was such a narrow pool. Yeah. that beyond the point they start imploding because even whom they insure had similar expectancies.
Right.
And then you had people who really had a lot of faith and trust in an Indian. So would you have heard of a gentleman called Babu Muttilal Seal? He's actually called the Rothschild of Calcutta. He had a good sway being an Indian over English merchants. He first got life insurance policies for Indians, 20-30% additional premium, but he got, and then instrumentally set up the first life insurance company. Similarly, World War One, you had a push for Indian industry, but any factory get insurance, you have to go do it from London. So Dorabji Tata set up the Indian insurance company post that nationalization issue of policies. But if we look at all of this, and then finally you getting policy on a click, we've come a long way. I think that gets lost at some level. Now, from here, what is important is where we go, and that's equally important. But first, just a bit of gratitude to what it took to come here.
Absolutely.
Now, the next element is people saying, okay, what's the next? Now, the next is you've got small ticket size insurance. You've got insurance whereby click of a button, you can maybe insure your mobile phone. We were discussing earlier, crop insurance, parametric solution. If the rain is below a certain level, you get a claim. So I think what is happening is that you're seeing an evolution whereby you have very niche, specialized policies, and it's not one big annual policy that you're depending. That's the evolution of the industry.
Yeah, I think it's fair. It actually leads me to my next question, which was also this diversification that we're seeing, right? Is that at the same scale, or do you think maybe it's early days, but do you see that growing, or is it still going to be concentrated on your core sort of, what we know as general insurance today?
So if I use an analogy of, let's say, a city skyline, you've got your top 2 or 3 towers, which will be motor, which will be property and health. And then you've got these foundations coming on the side, the smaller policies, the parametric solutions, cyber liability. Now, when I look at diversification, I don't see diversification as, okay, just selling different segments. As a risk professional, what I would like is definitely diversification, but with proper discipline, underwriting rigor. There is propensity for risk and capital to rush to the new segment. It's always the new thing to go after. Right? So as long as there is an understanding of the risk that these new segments bring, then there is diversification. And that's, I think, something that is a challenge for the industry and will be. I mean, if you don't leave the land, how will you venture out, find new worlds, right?
Right.
So yes, diversification, but I would still be wary of enough underwriting rigor.
Yeah. It's interesting because I think, I look at even when you book an Uber and you see that little 2 rupee insurance for just the ride, which is such a different way of even looking at that. And it's come very far from an insurance with like a process to get, and you had it for a year or 2 years, you signed up and you said, okay, this is my insurance. So yeah, I think it's exciting times for sure. Now, but the same thing, the problem is now new type of risks will emerge when you start doing some of these newer, and I think you alluded to that a little bit. So maybe you can tell us a little bit more about it from what you've seen or where you think these risks will emerge, especially when you're doing these newer types of insurance. Maybe you can talk a little bit about that as well.
So interestingly, some of the health products coming out, you've got companies where the wellness product, but if you do these parameters, you'll pretty much a good proportion of your premium back. Now, health products, yes, we look at medical inflation, but there's also data privacy. There is also an element of, the new treatments coming up, how expensive they are, whether they will increase longevity. So whether these risks you're considering in your products, you're redesigning your products or pricing. I think on the cyber side, on the liability side, I mean, if there is a cyber incident, thousands of policies, data is leaked. Liability, when we're giving professional liability covers, there's a lot of reputational risk that comes, which is way more than the claim. So whether or not these have been included or thought of is something that one has to be very mindful of. There's also something which I think is an aggregation, which is an ecosystem risk. wherein you have your own operations, but you also have risk being introduced by platforms you're working with. Of course, yeah. By your vendors, by shared digital infrastructure. So I see aggregation of these risks and whether or not your portfolio is diversified enough and you have considered is the area that requires more study, requires more thought, more rigor. But like always, industry's been around for a couple of million. I mean, it's still to
Continue. Yeah, fair enough. I think with the new insurance fraud monitoring framework that IDfy has brought out, now it's moving to a more proactive fraud management, right? I think from 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 what you've seen and in the industry, how is this actually playing out on the ground?
So I think it was October 25 when the guidelines came in. The good part of the guideline is it's put fraud risk management very much on the agenda of board of insurers. It was always there. You were always reporting it. But what it has shifted is from it being very episodic, okay, we found this, to it being more of a structural program. It lists down categories of fraud, red flag indicators, pervasiveness of fraud. So I think in that sense, what it has done is it's ensured that there actually is mind share and structured mind share to this area, firmly sitting on every agenda, yeah, or every meeting. And that's the right approach used. Number of times you require a set of formal guidelines to do that, but it's a step in the right direction. Not to say it wasn't happening. It's giving it structure, sir, giving it form.
Right. Now, having said that, I think is it actually, but are folks actually moving towards this sort of foresight and sort of anticipating risk, or is it still more compliance driven, sort of like the way it used to be done?
I think more often than not, companies considering regulations not as the ceiling but as a floor to see, okay, this is the baseline. What more can we do? Because they're seeing the value in terms of what it can bring, in terms of maybe cutting leakage, identifying probably areas where, okay, there could be potential losses, but we can save ourselves from it. So I see it as companies seeing value and not merely it being a compliance exercise. That's definitely changing.
Um, fair enough. I think if I were to say, if you look at sort of put this all in a playbook as such, right? What does effective risk governance look like?
As I said, tone at the top decides everything. If it's very clear that these are not customer harm or dissatisfaction outcomes that we're ready to accept, these are not losses that we will absorb, these are not reputation risks that we will take. That's your flow, that's your baseline. Secondly, an important element is that you've got simple lived structures wherein there are committees, there are people sitting on that committees where they actually know what it takes. Not 200-page manuals where it's so heavy and thick a manual that pretty much no one goes beyond page 5. And I think that is important. The third element is the collaboration between all three lines, your front line, your risk, and your third line, because then it's the responsibility of, it's a sort of a community structure. Right? It's not only, okay, risk is, fraud risk is, risk job. Yeah. They will do something, they will report something. If there is something to find, they will find it. Right. I think this is what the playbook looks like: shared responsibility and an understanding that it is something that genuinely will help me do my job better. And as a steward to society, it will help the industry do. I think that is the playbook that organizations.
Yeah, I think very well put there, because I think those are all things that sometimes maybe get overlooked when thinking about what does that effective governance look like. And I think it's probably maybe I would say a little bit of a misused word, governance, because it sounds very onerous. But I think it's the way you broke it down. I think it's actually, if it's a very structured way of thinking about managing risk and ensuring that, you're protecting the company itself and you're providing the right kind of solutions or rather service to your customers. Now, we started with trust. I want to go back to that a little bit. Talking about sort of designing trust beyond the risk and compliance era. So, where do insurance typically, potentially break trust for customers, unintentionally maybe? And what does it take to fix something like that?
Mm, to my mind, I think it's not about, say, an outcome that a customer, you know, is not happy with, a claim denied. I think it's more a misunderstanding in terms of expectations. And at the time of the sale, if it's not been explained clearly, right? It's not so much jargon that you've given that, yeah, at the time of taking the policy, the customer won't be thinking of various outcomes. So at that point, if you've not explained clearly what it covers, what it doesn't cover, I think that's a key point when, it hits you when the moment of trust comes, when the actual claim comes in. And then there's a sublimit that has been entered. There is a copay that is there. There's an amount that is not allowed, a situation that is not allowed. I think this is the key area. But more than that, it's also daily interactions, customer calling in for something, checking something. I think these are places where, if not handled well, you break the trust of the customer. And pretty much if trust is broken, what then happens is it's not the customer won't come and renew, but then you're setting back that entire category of insurance by a decade because then more people won't buy a policy.
Right.
Yeah. Now to fix it, I think first design the journey for understanding. Customer understands. You don't have to use Chat GPT and put the term and then say, okay, this is what it means.
But yeah, this is.
And secondly, design your products for customers. Yes, there is a technical aspect to it. But if you look at the technical aspect from a human perspective, I think that's the sweet spot, the balance you need to find.
Yeah, and I think if I were to also think about my sort of experience with insurance in general, I think you hit the nail on the head. It's the fact that sometimes you think you're getting insurance for certain things and certain coverage, and it's only at the time of a claim you realize, oh, that's what they meant when they said, that rider at the bottom that is got 4 lines saying this is not covered. Now, it's not mis-selling. I think it's just the lack of understanding and putting it in a way that as a simple consumer of this product, I will understand what my limitations are. Because then I think that sets the tone for saying, oh, I trust. In fact, in my head, that probably builds trust even more because you're being very transparent. You're saying, look, this is what it means in plain English. This is how you're going to be covered and not covered. We want to be very clear. I think that I feel sometimes is missing a lot. As a consumer, I can talk. I think I still struggle sometimes to understand what's being covered in insurance, right? And we still tend to use, I think, in the industry, a lot of technical terms. Oh, this is this rider. And you're like, okay. And you're in sort of a rush because you got probably 4 people, especially now, like you said, with the click. I got 4 coming in. I'm like, okay, I'll just pick the one that sounds about right and
Correct.
maybe middle of the pack because I don't want the cheapest because that doesn't cover some things. That I don't want very expensive because maybe they're just expensive. So I pick something in the middle and I'm good to go. I think that to me is an area definitely that needs to be explored more in a way that makes it easy for customers to understand.
It's also an investment that requires to be done to go the extra effort. And as long as in the process, you're doing all the steps from an insurance company perspective within the required timeline,
Right.
actually faster, but ensuring that you do them accurately. You're reasonable and justification, of course, polite in your communications, and you're communicating. I think that is important.
Yeah, I think that's where it's sort of in my head that brings more trust than anything else that you could do, right? Now, I think we covered this a little bit, and I think maybe there's a little repeating. But if you have to build this at scale, trust at scale, what does that look like in the real world?
I think the first level, the full journey, built on simple understanding, simple live structures. in a manner that the customer can understand, and you spending that time to help the customer understand, but not as big brother or not in a condescending way with big terms, taking that effort in. Because the more the understanding, the more the appreciation. Secondly, as I said earlier, if you incentivize for short term, then you will result in getting short term use. Not only about low loss ratios, not only about just issuing the policy, but also about saying, okay, if the certain type of policies getting these recurrent complaints, what is it? Are we not communicating it properly?
Right.
Have we not designed it properly? Do we need to change something? Do we need to change a fundamental? I think that is important. Building scale at trust requires these two elements because it's the entire journey. It's not just issuing the policy and that's it. Yeah, it's through the life cycle of the product that you have to be with the customer, and the customer should have that sense that yes, there is an empathetic ear
On the other side. Yeah.
at the other side.
Absolutely.
Building scale at trust, and it's not easy from an insurance company perspective. It also require customers to be patient to understand.
Yeah, of course. I
So
think
it's a, I would say it's a handshake. It's a two-way street. Insurance company needs to put in more effort because, as I said, the underwriter will know more about the risk. So has to go two steps
it's
more.
right.
Be patient because it plays to long term. It plays to trust.
Right.
Right.
So, and one of the things that you probably hear when you say this, I think a lot of people may take the reaction of saying, oh, but isn't that a lot more expensive? Now, you're talking about all of putting this additional sort of possible structures and time and effort. Does that mean it suddenly becomes a lot more expensive and maybe not as lucrative? What do you say to that?
I wouldn't think so because at the end it normalizes. Either you invest your time here or you spend your time there. It's a difference between investing and spending. Investing will get you return.
Right.
Spending, I always believe no one likes to spend. Everyone likes to just get returns.
Right.
So I don't think so.
Yeah.
I think it's investing for the long term.
Yeah, and I think the way you put it, where if you do this upfront, I look at it as what I heard also, maybe my interpretation is that's your LTV you're working on. I will be a customer for life if I have the right, like I said, explanation of what that policy is. I have an empathetic ear when there's claims. I fully understood what I was getting into. Chances are very high that not only will I be a customer for life, but I will possibly even refer. So I think maybe those things are maybe not as quantified, but I feel like that's where the real strength. And this is for probably any product in general. Like when we look at from a product lens, we say, will the customer say, yeah, love it, understand it, and I will recommend the NPS. I will recommend it to 5 friends. I think that's the proof in the pudding.
The only annotation to that is your insurance premium is only a line item on your credit card statement or bank statement until the event comes.
Until the event comes. Yeah.
And then, and
Then it's everything.
Yes. And then you're interacting at a moment where, rightfully so, you're probably under a certain level of emotional stress or distress.
Right.
And hence we have a stewardship responsibility to go the extra steps.
Right.
So you can't expect someone who's been through maybe say an accident or through going through a health situation to be at your best in terms of you'll probably have something weighing on your mind. So as I rightly said, it's not about spending more, but investing that little more, because then the customer comes back, refers, adds family members.
Exactly. I think that's the long-term investment. We'll go into a little bit more of AI and sort of intelligence and what's happening in this space. In your thinking, is AI genuinely improving fraud detection and sort of risk assessment today, or is it still some ways to go? Is it being implemented at scale in the industry to manage some of this, or is it too early right now?
Oh, very much implemented at scale. I think AI is very good in terms of identifying patterns which maybe a human eye wouldn't see. It will take disparate sources of data and paint a picture, different pictures for you to select.
Right.
So definitely and specifically in general insurance and health, very useful. Out of maybe 10,000 alerts done well, it can pull out just the 200 that you need to focus on. So definitely from a general insurance perspective, yes, a huge value for investment, but if done right, you need to have your thinking right. I think that is key.
Yeah. And you're seeing this happen now. People are starting to invest and say, yeah, we are going to see returns here. Because that's another challenge, right? It's not, in some sense, not very cheap to implement, at least initially. I think over time, of course, it can pay for itself, and maybe as you mitigate a lot more risk, it naturally pays for itself. But the initial capital investment to get something like this set up, that's why I was very curious whether it's actually happening or is it just sort of very early seeds. Because you know some version of AI maybe in underwriting was always there, right? As soon as we got more computing power, probably models were being built. But now you can do it at onboarding, you can do it at sort of the life cycle of the customer. You sort of start identifying risk patterns, and maybe even in health, for example, right? Using AI to detect health and maybe provide proactive
Exactly.
support for the customers and things like that. I don't know if it's at that scale, but that's why I was very curious.
I think very much. You've seen the value, we are implementing. So in that sense, pretty much, you know, at least help one preventing customers from facing bad outcomes, and also from employees from making bad decisions. So you've got your prioritization there, and then your employees, your team members are looking at the right areas. So definitely value in the industry.
And so one side of the world is moving towards AI will decide everything. Um, Leave it to AI. It's smart enough. Agents, agentic AI, and all of these things are coming into play. And in multiple industries, we're seeing this. On the other hand, there is the whole human judgment. Um, you know, um, where do you think each of them have their more value? Sort of. I personally, I don't think human sort of touch is going away, but would love to hear from you.
So as I said, is very good in terms of identifying patterns, going through volumes of data. But you need the human to decide the principles. Yeah. So it's the human touch that will be able to put a context of fairness,
Hmm.
of ethics, of history of the company, the brand it's built, the reputation that it wants to protect. That element, it is the human in the middle that will do. If you give a rule, it, AI will give you a determination and an outcome, right? But the human will say no. If we do this, the customer has been with us for 15 years. It's the first time he's come.
Yeah.
We trust the customer because up till now,
No reason for yeah.
if you put in a rule or parameters not met, that's it. You can directly have a letter printed out and or other mailed out as a
Right.
so for the principle, you need the human touch. So there'll always be human, but AI enabled.
Yeah, I think very well put. I think and I think in an industry like insurance, where and I think you alluded a couple of times that mm, you know the individual is coming to you at a time of distress. I don't think AI will be very deterministic in its way. It'll dispense of whatever it's supposed to. It'll probably just say no, sorry, it meets certain requirement. But I think this human layer of saying, hold on, customer for a long time, no history of anything. Perhaps there is an exception to be made, right? Um, okay, last set, I think, look ahead. I think, what would it take to truly realize the vision of insurance for all, right? I think we had this by 2047. Um, what all sort of big key events need to happen?
It's the uh, insurance 47 plan. I think it's an excellent initiative. The way I look at it is, it's not about selling new policies. It's about ease of access and understanding.
Mm.
So you've got customers who understand what they buy is easily accessible. Secondly, it's about trust at the moment of the claim. So there is trust both between the customer and insurance company. And we discussed on the investments between both sides.
Right.
Because once a first generation insurance customer is denied or refused a claim, person may never buy it again. You're setting back the entire category of insurance by a decade. Third is system needs to be resilient. You will have that large claim, the catastrophe coming. System itself shakes.
Right.
So you've scaled, you've sold, but the resilience of the system, adequacy of capital, the guardrails, I think these are three key elements. It's not just about covering.
Yeah.
I think it's about ensuring these elements are in place. And then, of course, cover.
Yeah. I think, because I think insurance for all 2047. Yeah. And paper, again, it seems like a great idea. But I think, like you said, if there aren't the right guardrails put in place, because it's easy to give out insurance, sort of, I guess, coverage to everyone because it's sort of the mandate. But without the right kind of risk guardrails, I think it's possibly setting up a lot of companies for failure. Because that one event is, we've seen COVID already, and so I think there's only going to be more of these. There's a lot of environmental disasters, sort of a lot of conversation around a lot of this. So that's a very interesting sort of perspective to keep. One last question: what's the biggest risk in the next 3 to 5 years for the insurance industry?
Maybe more than one. Okay.
Absolutely.
I think first, definitely climate change and catastrophes. You're seeing, climate change, you're feeling it. Catastrophes are getting more severe. On the medical front, I would say longevity. New treatments are coming in. People are going to live longer. New types of ailments are coming. Whether you are designing your products and or pricing them. Thirdly, the entire cyber or liability. I mean, cyber is becoming everything. Yeah. I think, these are going to be the biggest risk. And all of this will be based on conduct. Because the conduct of the insurance companies when selling a policy, customers will build or break the trust. So, right at the foundation of everything, the conduct risk of the insurance company and all associated stakeholders. I mean, that's a key risk. And I mean, you may not get right every time, but I think the endeavor should be to ensure that we get it right every time.
Absolutely. On that note, I think definitely a very interesting conversation. I love the fact that you started with history, because that's something that I think if we tend to forget, maybe even just the origins of where this industry started. I think to me that was a great starting point, and then moving all the way from that to sort of the AI-enabled world and what we may see in 2047 was definitely super enlightening. So thank you so much. I really appreciate your time, and I think all the I want to say sort of that risk angle, but with this, there's so much empathy and sort of humanity in it. So that was fantastic. Thank you so much, Lesten. Really appreciate it.
Thank you. Pleasure to be here.
Yeah.
Pleasure to serve.
Thank you.